ICAI study material questions, chapter number 1. Test your understanding. Question number 1. ABC and Associates Chartered Accountants has a policy to accept the clients wherein the risk evaluation is conducted with respect to the company and the promoter. XYZ Limited approached ABC and Associates. Promoter of XYZ Limited is a close associate and family friend of Mr. A, managing partner of ABC and Associates. XYZ Limited is in use in the previous year for certain inquiries from the regulatory authorities in relation to certain matters. The existing auditor of XYZ Limited has resigned and has created a casual vacancy. XYZ Limited is ready to offer 25% more than the existing fees and has approached ABC and Associates for appointment as auditor. Mr. A has strong recommendation to the firm to accept the audit. What is your understanding of the functioning of the tone at the top of the firm ABC Associates Chartered Accountants? What are the considerations one should exercise to uphold firm? The given situation indicates that proposed client is a new one whose promoter is close associate and family friend of managing partner of Messrs. ABC and Associates. However, previous auditor of the proposed client has resigned and company is offering hike in audit fees in comparison to the audit fees paid to the previous auditor. Besides, there are also regulatory inquiries against the company. In spite of all this, managing partner of the firm, Mr. A, has recommended for acceptance of offered audit of the company. It reflects poorly regarding functioning at top of the firm as regards to quality control. SQC 1 requires that firm should establish a system of quality control designed to provide it with reasonable assurance that firm and its personnel comply with professional standards and legal and regulatory requirements. It further requires that firm's business strategy is subject to overriding requirement of the firm to achieve quality in all engagements. However, in the given situation, commercial consideration seems to be overriding factor. The managing partner of a firm is close associate and family friend of the promoter. The matter should be brought to knowledge of the firm in accordance with the requirements of SQC 1, as it involves issue of independence of managing partner of the firm with respect to the proposed audit engagement. Further, matters of inquiry from regulators and resignation of the previous auditor raise question about integrity of the proposed client. SQC 1 further requires firm to consider before acceptance of an engagement that client does not lack integrity. All these factors need to be taken into consideration before accepting engagement. Overall, such a situation reflects lack of proper establishment of quality control framework at the top of the firm. Following considerations should be taken into account while upholding quality of the firm. The firm assigns its management responsibilities so that commercial considerations do not override quality of the work performed. The firm's policies and procedures in relation to its personnel are designed to demonstrate its overriding commitment to the quality. The firm devotes sufficient resources for development and documentation of its quality control policies and procedures. A firm, before accepting an engagement, should acquire vital information about the client. Such an information should help the firm to decide about the integrity of the client, promoter, and key managerial personnel, competence, including capabilities, time and resources, to perform engagement and compliance with ethical requirements. Next question, test your understanding. Question number 2. M&P and Company, a firm of auditors, is appointed by a bank to conduct stock audit of a borrower. It deputes one of its paid chartered accountant employees as to conduct above said stock audit. He leverages it as an opportunity to prevail upon the client to get the accounts audited from their firm. He also assures that client of a clean stock audit report without adverse comments as a quid pro quo. Is approach of S proper? How does it reflect upon quality control system of the firm? Here, the approach of S is not proper. Such practices blatantly violate code of ethics and its spirit. It reflects poorly upon quality control system of the firm envisaged in SQC 1, which requires the quality control policies and procedures should be documented and communicated to the firm's personnel. It shows that firms' personnel are not properly sensitized regarding requirements of SQC 1. Next question, test your understanding 3. CAM is introduced to a prospective client in a social function. He assures to visit office of CAM very soon in relation to professional work. During discussions over a cup of coffee next week, it transpires that there was a search by Enforcement Directorate (ED) in his premises about a month back, resulting in recovery of huge sum of cash. The Income Tax Department had also searched his premises in relation to bogus capital gains on penny stocks, lamenting poor quality of services provided by his present auditor. He offers appointment as tax auditor of his 5 family-owned firms to CAM in lieu of handsome fees. What are the factors to be evaluated by CAM if he wants to take up the engagement? As per SQC 1, before accepting a new engagement, integrity of the client should be considered, including matters that indicate involvement in money laundering or criminal activities. There has been search of ED on the said party, leading to recovery of huge amount of cash. The above, coupled with actions of Income Tax Department relating to bogus capital gains on penny stocks, indicates that client might be involved in money laundering activities. Therefore, offer should not be accepted. The conclusion is offer should not be accepted. Next question, test your understanding 4. GVN and Associates are auditors of a listed company involved in fintech sector. The engagement team is stuck up with some issues pertaining to a particular Ind AS applicable to the firm, to the company. Ind AS applicable to the company. They have framed a query and sent to ICAI for expert opinion on the matter. The issue was resolved upon receipt of the expert opinion. Since expert opinion was provided by ICAI, engagement team was of the view that appointment of Engagement Quality Control Reviewer (EQCR) has lost its relevance. Do we agree? Answer is, Engagement Quality Control Review in listed entities is a mandatory requirement. Expert opinion of ICAI pertains to issue of interpretation. The appointment of reviewer is a separate and mandatory requirement in audit of listed companies. Therefore, EQCR is mandatory in case of listed companies. Even though they have gone for ICAI regarding expert opinion, it is just pertaining to interpretation issues. Next, test your understanding 5. RST and Company, a firm of chartered accountants, are auditors of a listed company engaged in manufacturing of heavy machinery components. The audit report for the year 21-22 also included reports on matters listed in CARA 2020, while reporting under Clause 7A of the said order relating to regularity of undisputed statutory dues by the company. The auditor have commented that company is generally regular in depositing statutory dues to appropriate authorities. Is above reporting qualitative and in line with the requirements of SA 220? Answer is, such type of reporting is not qualitative. It is not in accordance with SA 220. One of the objectives of the auditor, as per SA 220, is to implement a quality control procedure at the engagement level that provides the auditor with reasonable assurance that audit complies with professional standards and regulatory and legal requirements. The reporting under CARA 2020 is not proper, hence the audit does not comply with regulatory and legal requirements. Next question. Question number 1. Theoretical question number 1. Test your understanding. Question number 1. PQR and Associates are statutory auditors of a listed company. There arose an issue during the course of audit relating to related party transactions. The engagement partner wants to consult Engagement Quality Control Reviewer on this matter during the course of the audit process itself. Can he consult with Engagement Quality Control Reviewer? Discuss. The answer is, it is necessary to maintain objectivity of the reviewer. Therefore, participation in engagement or making decisions for engagement team is to be avoided at all cost. However, engagement partner may consult Engagement Quality Control Reviewer during the engagement so as not to compromise his objectivity and eligibility to perform the role. That means the conclusion is engagement partner may consult EQCR during the engagement. Next question. Beta Private Limited has approached a firm of chartered accountants to assist them in preparation of financial statements and issue a compilation report in this regard. Does CA firm has responsibility in relation to quality control for above said engagement? Discuss with reasons. Such kind of services falls in the category of related services. SQC1 is applicable to all types of engagements, including engagements pertaining to related services. So they need to maintain quality at all costs. Next question. Ramanujan, a CA final student, feels that engagement file in audit engagement should be ready prior to issue of audit report. Discuss whether Ramanujan's view is in order. The answer is, the firm should establish policies and procedures for engagement teams to complete the assembly of final engagement files on timely basis after the engagement reports have been finalized. Engagement files should be completed in not more than 60 days after date of auditor's report in case of audit engagements. This view of Ramanujan is not in order. Next question. BNE and company are in midst of audit process of a listed company. During the course of audit, an issue arose relating to revenues from contracts with customers in terms of Ind AS 115. The engagement partner took a certain stand. However, engagement quality control reviewer EQCR recommended otherwise after review. The engagement partner is not willing to accept recommendations of the reviewer. How can the stalemate be ended? In case recommendations of the engagement quality control reviewer EQCR are not accepted by engagement partner and matters is not resolved to reviewer's satisfaction, the matter should be resolved by following established procedures of the firm, like by consulting with another practitioner or firm or a professional or regulatory body. The audit report should be issued only after resolution of the matter. Next question. MB and Associates is a partnership firm of chartered accountants which was established 7 years back. The firm is getting new clients and has also been offered new engagement services with existing clients. The firm is concerned about obtaining such information as it considers necessary in the circumstances before accepting an engagement with a new client and acceptance of a new engagement with an existing client. The firm is looking to work with only selected clients to adhere to quality control standards. Guide MBA and Associates about the matters to be considered with regard to integrity of the client as per the requirements of SQC1. As per SQC1, the firm should obtain such information as it considers necessary in the circumstances before accepting an engagement with a new client, when deciding whether to continue an existing engagement, and when considering acceptance of a new engagement with an existing client. Where issues have been identified and the firm decides to accept or continue the client relationship or a specific engagement, it should document how the issues were resolved. With regard to integrity of the client, matters that the firm considers includes, for example, the identity and the business reputation of the client's principal owners, key management, related parties, and those charged with its governance, nature of client's operations including its business practices, information concerning the attitude of the client's principal owners, key management, and those charged with its governance towards such matters as aggressive interpretation of accounting standards and the internal control environment. Whether the client is aggressively concerned with maintaining the firm's fees as low as possible, indications of an inappropriate limitation in the scope of the work, indication that client might be involved in money laundering or other criminal activities. The reasons for the proposed appointment of the firm and non-reappointment of the previous firm. The extent of the knowledge a firm will have regarding the integrity of a client will generally grow within the context of the ongoing relationship with that client. Integrated case scenario. CA Mrityunjay is a statutory auditor of a listed company engaged in providing services relating to tourism sector. He is practicing in sole proprietorship capacity. The audit of the above said listed company was conducted by his proprietary firm and report was issued for the year 21-22. Subsequently, audit report was selected by NFRA, National Financial Reporting Authority, to oversee quality of service and compliance with standards. Necessary information was called from the auditor towards above objective. It was required of him to produce audit working papers to show that audit was carried out in accordance with the standards on auditing. Details of the audit plan and details of the risk assessment procedures carried out to identify and assess risk of material misstatements in financial statements were called. It was also required to show how response to assessed risks was designed and implemented and communicated with those charged with governance. Audit working papers sent by him through email includes procedures on how some balances in financial statements were verified. Also included in working papers were procedures performed by him relating to verification of inventory, trade receivables, and trade payables. The working papers sent by him to the authority did not include details of audit plan and manner of identifying and assessing risk of material misstatements. On being asked to respond, it was reasoned by him that audit was properly planned and required procedures were carried out in relation to the material items on test basis. It has been further clarified by him to the authority that audit was carried out in accordance with the standards and it was practically not feasible for a firm of small size to make a detailed audit plan. It was also put on record with the authority that he had assessed risk of material misstatements to be low based upon his understanding of the company. He has further reasoned that assessing risk is a matter of professional judgment. Representation has also been made by him stating that communications as necessary were made orally with those charged with governance. It was also pointed out to him that engagement quality control review was not carried out. He has answered that no contentious matters arose during the course of audit and therefore no need was felt to carry out this exercise. Attention was also drawn to the fact that financial statements of the company were required to be prepared on the basis of Ind AS. However, at some places in notes to accounts, a reference is made to accounting standards which are not applicable to the company. These errors have been attributed to data feeding entry errors by junior staff. Based upon above, answer the following questions. It has been contended by the auditor that audit was properly planned. He has further stated that it was practically not feasible for a firm of small size to prepare a detailed audit plan. Which of the following views is most appropriate in this regard? First option, audit was in fact planned as evidenced by auditor submissions. Second, although auditor has no record of audit plan, it does not affect compliance with SA 220. Third, since auditor has no record of audit plan, it goes on to show non-compliance with SA 220. D. Audit was in fact planned as evidenced by auditor submissions. However, there is an exemption for small CA firms doing away with cumbersome documentation in relation to audit plan. The option C is the appropriate one. Since auditor has no record of audit plan, it goes on to show non-compliance with SA 220. It is non-compliance as per SA 220. Second question, the auditor has reasoned that risk of material misstatements has been assessed to be low based upon his understanding of the company, and it is a matter of professional judgment. Identify the most appropriate statement from the below in this regard. First one, assessing risk of material misstatements is a matter of professional judgment. It cannot be demanded from him how his judgment was arrived at. Second one, although auditor has not submitted record of how risk of material misstatements was arrived at, it does not affect compliance with SA 220. Third, since auditor has no record of how risk of material misstatements was arrived at, it goes on to show non-compliance with SA 220. Fourth, such a query itself is outside the mandate of authority. Option C is correct. Since auditor has no record of how risk of material misstatements was arrived at, it goes on to show non-compliance with SA 220. First option is also non-compliance with SA 220. Here also non-compliance with SA 220. Third one, considering auditor's point of view regarding engagement quality control review, identify the most appropriate statement from the below. First one, engagement quality control review is mandatory in such type of engagement. It was not proper for the auditor to bypass such review. It has violated mandatory requirement of SA 220. Second option, engagement quality control review is optional in such type of engagement. Therefore, question of not following SA 220 does not arise. Third one, no contentious matters arose during the course of engagement. Therefore, question of not following SA 220 does not arise in respect of engagement quality control review. Fourth one, EQCR is dependent upon benchmarks established under SQC1. If those benchmarks are not satisfied, such a review is necessary. First option is correct. EQCR is mandatory in such type of engagements. It was not proper for auditor to bypass such review. He has violated SA 220. Next, considering auditor's reply regarding errors in data feeding entry by junior staff in relation to the accounting standards, which of the following statements is proper? First option, such are examples of clerical errors encountered during preparation of the reports. There is no question of non-compliance with SA 220. Such are examples of clerical errors encountered during preparation of the reports. There is no effect on auditor's opinion, and consequently question of non-compliance with SA 220 does not arise. Such are examples of serious lapses on part of auditors showing non-compliance with SA 220. Such are examples of serious lapses on part of auditor. However, these are not related to compliance with SA 220. Option C is correct. Such are the examples of serious lapses on part of the auditor showing non-compliance with SA 220. Next, fifth one, on your overall reading of the case study, which of the following statements appear to be true? First one, the firm has an effective system of quality control described in SQC1. Audit engagement has also been performed in accordance with SA 220. Second option, the firm does not have effective system of quality control described in SQC1. Audit engagement has also not been performed in accordance with SA 220. Third option, SQC1 is not applicable in the case audit engagement has not been performed in accordance with SA 220. Fourth one, SQC1 is not applicable in this case. Audit engagement has been performed in accordance with SA 220. Option B is correct. The firm does not have effective system of quality control described in SQC1. Audit engagement has also not been performed in accordance with SA 220.